Hi everyone, welcome back to my YouTube channel Mannu Ishu ACCA classes. So in this video, we will be learning about Enterprise Management Incentive Plan. In previous video, we had covered company share option plan, transfer of share, its tax implications, CGT implication. In case you have been missed out my previous video, you can still watch it out from the playlist available on my YouTube channel. And the same link of the same also will be reflected over your screen. You can also access from there. In case you are watching my video for the first time, do not forget to subscribe my channel and share it among your friends so that they could also have the benefit, right? Okay, so let's talk about Enterprise Management Incentive Plan. If you remember from my previous video where we had discussed about the company share option plan, this plan is also similar to those, and there is some changes which I will try to highlight so that it will be easy for you guys to remember. I must say the question is very straightforward in this regard. You only need to identify the characteristics to state the characteristics, or need to identify the suppose organization is about to start this plan and they might be doing something wrong as per the condition or criteria. So we need to explain those incorrect condition rules that they have been imposed on. The question is very straightforward. After the completion of the topic, we will obviously discuss the question as well. So let's start. In the company share option plan, it was flexible where employer can offer the plan to any selected employee. The same case applicable for the enterprise management incentive as well. It is also flexible. It's upon employer whether to whom they want to give this plan. It is not like offer open to all the employee. Only selected employee will be included in this plan. Okay, it is not necessary to offer this plan to all employee in the organization, but whoever the employer has selected, they must meet certain condition, and this was also case for the CSOP. You can see from the above there was condition in CSOP regarding the employee eligibility. So there are three conditions. That was employee should be the full-time employee if they are director. In case they are non-director, in that case both are acceptable. Full-time, part-time, both are acceptable. Employees should not own 30% or more of the company's shares. So these are the employee eligibility criteria for CSOP plan. Okay. Now, in case of enterprise management plan, incentive plan, employee eligibility criteria is that employee must be full-time worker. No matter whether it's director, non-director, but they must be full-time worker of the company. And other criteria is that their shareholding in the company should be less than 30% of the company share. Okay, so employee shareholding in the company should be less than 30%, and this was also the same as the CSOP plan. Right? Now let's talk about the exercise period. In enterprise management incentive plan, exercise period is 0 to 10 years. Whereas in case of CSOP, exercise period was 3 to 10 years. Right? So this is the difference. Yeah. Okay. Now coming to the maximum value. In enterprise management incentive plan, maximum value that employer can offer to employee is 250,000 per employee. And that should be based on the market value at the grant date. Remember the three dates which I haven't discussed in my previous video. Grant date, exercise date, and disposal date. Grant date is where the agreement is made between the employer and employee regarding the share to be offered. Exercise date is when employee actually get those share acquired by exercising the right, and disposal date is the when employees sell those share in the market. Right? So this 250,000 is based on the market value at the grant date. Okay. But if employee is already part of the CSOP plan, then this limit will be reduced by the value of a CSOP share. Right, and if we go for the CSOP, their maximum value that can be granted is 30,000 per employee, and that should also be based on the market value at the granted. Right. Okay, so now exercise price. If we talk about the exercise price, it must be equal to the market value at the granted on the granted, and I think this is same for the CSOP. We will look in a while. And if exercise price is less than the market value, in that case difference is treated as the employment benefit and it is taxed accordingly. Right. So if we will go for the CSOP where exercise price was equal to market value on the grant date, right, and but here we need to consider about if it is less than the market value, then the difference should be treated as the employment benefit. So now for the employer, it's the same benefit in the CSOP as well as EMI plan. If as it is an approved plan, so employer can whatever the expense incurred by employer in making arrangement of this plan, that can be allowable expense and can be deducted against the trading profit. Right, and this was same for the CSOP. If we will look at the tax benefit for the employer, it's the same. They can also claim the allowed expense from their trading profit. Right. Okay, so now here the new thing is that in this plan there is not only criteria for the employee, but organization should also meet a certain criteria in order to run this plan. And what is that? The first is that they must have a company should have a fewer than 250 employees. Okay, and they have a gross asset less than 30 million, and they should not be the 51% subsidiary of the other company. Okay, so these three are the criteria for the organization. Right, this is a new, and it was not for the CSOP plan, but it is for the EMI plan. Okay. Okay, so till that we covered almost thing about EMI. One thing is left, that is the business asset disposal relief. So if employee is a part of the EMI plan, in case of disposal, they may qualify for the BADR, but the whatever the condition or criteria was for the BADR, it is relieved in this plan. And what is that? That 5% condition of the holding is waived. Other that 2-year ownership start from the grant date. Right, grant date means when the agreement was made. Right. So this is the new as well for the it was not for the CSOP plan. So the last 2 points are new, and that should be remembered. So this is all about EMI, and you might be asked to like state the criteria, or might be employer is planning to run this plan, and but they have kept wrong criteria, like they might have been kept the exercise period of 3 years, but here 15 years, right? But it can be exercised from the 0 to 10 years, right, in between. Or regarding holding percentage, there might be something wrong that we need to identify from the scenario and state that yeah, this thing has been wrong, because as per plan this is the rules. Okay, so I hope this video is very useful, so share it among the ATX student so that they could also have the benefit, and stay tuned for the more this kind of video. Have a good day.